And India is getting ready for one of its biggest tax resets since the rollout of the goods and services tax. The GST compensation cess, which kept taxes high on tobacco, cigarettes and pan masala, is set to end next year. To prevent revenue losses and keep these sin goods expensive, the government has now introduced two new tax bills. Let's break that down for you. The new levies mean and how they will change the tax landscape for tobacco and pan masala manufacturers. Let's start. Now, the GST compensation cess, added back in 2017 to offset revenue losses for states, was always temporary. But now that it's being phased out, the government has moved fast to plug the gap. Finance Minister Nirmala Sitharaman on Monday introduced the Central Excise Amendment Bill 2025 during Parliament winter session. This brings back a strong excise duty on tobacco products. Under this bill, excise duties will fall in the 60 to 70% range, and for cigarettes, the rate will depend on the length of the stick and whether the product has a filter. The Finance Minister also clarified that the existing GST compensation cess on tobacco will be removed only after all loan and interest liabilities linked to that cess are fully paid off. Now, why is this important? The government wants to prevent a drop in tax collection when the GST cess expires next year. The new excise duty will keep tobacco and cigarette taxes high and ensure states do not lose revenue when the compensation mechanism ends. Now, the second bill, the Health Security and National Security Cess Bill 2025, targets pan masala and any other goods the government may notify. Unlike the old system, this new cess will be based on the declared production capacity of machines. Prices for tobacco products, cigarettes, gutka, pan masala, they are expected to remain high. Even after the GST cess disappears, the new system promises more compliance, steadier revenue and stronger funding for public health and national security programs.